Hi everyone, welcome to the Timing Research Show for November 30th, 2015. Today we will be talking about the 114th weekly report from Timing Research. So I have Jonathan Rose hosting for me again, so I'm going to go ahead and turn it over to him.
Great, thanks Dave. Excited to be here. Got a great panel again. Just to start, my name is Jonathan Rose from Active Day Trader. Today we have Glenn Thompson from Pacific Trading Academy, Roy Swanson from Steady Trader, Corey Rosenblum from Afraid to Trade, and then later on in the show, Alla Peters will be joining us from Alpha Wave Trader. So we're just going to go, Glenn, why don't we start with you? If you could just tell us a little bit about Pacific Trading Company.
Sure. We're an educational academy, and we've been in operation for 15 years. I started at the beginning with them for 15 years. I've actually been trading about more than 30 years now. Most of my career was back east, literally all over New York, the New York metro area. I grew up in New Jersey, but 18 years ago moved westward, so I currently reside in Los Angeles and still trade my own accounts, but have enjoyed teaching and mentoring and coaching other traders and have worked with hundreds of traders, if not more than that, over the 15 years that we've been working. I'm primarily work from a technical standpoint, and in my own accounts I pretty much focus on the financial derivatives, E-mini, and I also do spot currency pairs in the evening, but I teach the gamut of primarily technical approach, though. If you were to ask me in terms of more specific areas, trend would be number one. Market timing is, I look very, I think is integral and critical. I do a little bit of Elliott wave, and I also focus on intermarket relations and so forth. So that's a quick overview of my thoughts and how I approach it. As far as teaching, and we have a cadre of different mentors. Each has their own areas that they focus on, so we're able to kind of cover the compass, if you will. But yeah, we're primarily education, and I focus on the technical approach.
Great, thanks, thanks, Glenn.
Sure.
Actually from New Jersey as well.
Oh, okay, great. Yeah.
We'll talk after.
Sure.
Let's shoot over to Roy with Steady Trader.
Okay, hey, listen, I'm from Fort Lee, so I won't be left out of this discussion.
We're taking over, yeah.
That's right. Anyway, I've been trading since the early 90s. I was consulting for over a dozen years for various trading educators, and decided about 2 years ago to go out on my own with a site called SteadyTrader.com. We have a system, I call it VST, trend trading, for very short-term trend trading. We call it green light, and we use a combination of 3 indicators in a proprietary scan. It's our primary, the primary strategy we teach, and we also have a tool that we offer, which is called the Strategy Stress Tester, which is actually very much like a full-blown P&L model that any business manager would use if you were running a division of a company or even a small business or a division of GE. It's a kind of P&L model that business managers use, and you can apply it to a trading account and plug in all what I call the KPIs to figure out if your strategy even makes sense. It's just, it all comes out in the numbers. So we're very numbers oriented, although we do take a hard look at the news of the day for everything because the media is so powerful.
Okay, great. Thanks, thanks, Roy. And then Corey, if you can, let's introduce Afraid to Trade, please.
Sure, I'm the southerner of the group, so I'm from Alabama, not from the East Coast, kind of, but I'm like Glenn. I moved to Los Angeles. I'm out here on the West Coast just about 2 years ago. Yeah, Afraid to Trade is a website that I've been operating since 2006, which provides really 2 things. It's the daily commentary and the membership report, similar to Glenn with the intermarket. Look at trend as well. Trend is extremely important to everything I do. Personally, I tend to trade the S&P futures and the E-minis and swing trade leading stocks and commodity ETFs for the most part. And I've been trading since, or investing into trading since 1999. The run up in the bull market all the way through the 2000s and into now. But it's mainly overcoming fear is what we focus on. So emotions and education in that with technical analysis and, of course, trading strategies and approach that focuses on trend analysis.
Great, thanks, Corey. So that last question of the day is right in your wheelhouse.
Absolutely.
Okay, I'll give you a quick rundown. My name's Jonathan Rose. I own ActiveDayTrader.com. I started trading. I graduated college in 1997, moved to Chicago and was a floor trader at the CME for 5 years, and then I joined a fixed income proprietary shop for the next 10 years, and then after that I was a market maker on the Chicago Board Option Exchange. Finally, not under a non-compete anymore, I started Active Day Trader about 5 months ago. So this has been quite the experience. I still trade full-time and now also do a lot of mentoring as well. Active Day Trader, we concentrate which is more based on my trading style. We trade a lot of options, trade a lot of kind of off the beaten path names. We stay away from from the Apples and Amazons, and we're definitely looking for much more like niche type opportunities. And I think that's really just through my career, especially after being a market maker and really seeing how those options are priced, those trades are definitely where I excel. So now we're going to go through. We'll stay in the same order, and then of course, as you guys know, we welcome everyone to take over the screen if they want to show their own screen for examples. And let's start with Glenn first with Pacific Trading Academy. And we'll combine 2 questions based on any technical or fundamental analysis. Do you think the S&P will be higher or lower by the end of the week? And then if you could give a degree of confidence with that as well.
My projection for this week is lower. I'm a little hesitant here. The reason is I base it on some time targets that I had worked out for the S&P. My last time point came in a week ago today, last Monday, and then curiously I had a time target for the interest rates on the 26th, which was Thanksgiving Day, the holiday. So my projection and what I think the dynamic I think that's going to take place is the impact that those dates had and how they relate to the market is going to be transferred to this week. I was expecting the market to form a top last week. I think we had a little bit of a top, but I think it more or less is going to we're going to see the manifestation of what I was expecting last week to occur this week because of the holiday. I think it's skewing things. So I'm going to say lower by Friday. Because the numbers and the dates actually came in for last week, I have a little lower confidence than I might typically have. I'm going to say 60%. I'm kind of equivocating here, but that's my thought. Lower by Friday, and it also correlates with the next time point I've worked out for the equity sector, which is I've got December 18. Which is curious because that's closely related, I think, to the next time the Fed. I think they meet on the 16th or so of the middle of next month. So, or December actually coming up. But so I'm going to say lower by Friday, and again, primarily based on the rotations that I'm working out based on my time projection.
Okay.
Yeah.
Great. Thanks, Glenn. So lower 60%, and let's go over to Roy with Steady Trader.
Okay, I'll say higher. And I will say that at 65%. Again, we use our own system to monitor this. It's really a very short-term system. The time horizon is 5 days max, so I'm pushing it here. But we see the market going higher this week.
Okay, fantastic.
And, I think we're having our typical today. We're having our typical month-end sell-off.
Right. Okay. That's why they make markets. One lower 60%, one higher 65%. Let's go to Corey.
Fascinating. I'm focused. I'll go into more details later in the second part of the question, but I'm focusing on 2100, as I think we all are in the S&P. There's divergences going into that level. There's about 3 or 4 days of reversal candles. We're coming down today. And we've got the Fed meeting, a beige book. We have an employment report. All these things. It's going to be a variable week. If I had to say anything, I'd say down initially and probably up from Wednesday on. But do we get back above 2100? Not sure by Friday. But if we're above 2100, yeah, we're probably testing out those highs. I'll go ahead and say 70% for a lower close. But if we're above 2100, that's going to be out the window.
Yeah.
All right. Thank you. Thank you. I appreciate that. I actually, funny enough, I'll take over my screen here as well. And I definitely echo Corey's feelings as well. So the last here is SPX. I'm just big on very simplistic charting. I like to just look at charts for an overall bias. But then the last 3 weeks now, so today's high 94. Last week's high was 96, 97 the week before. The week before that was 2097. So now 4 weeks in a row, if we count today as a week, the high 2096, 2097. So that's obviously a major, major band, especially with the VIX getting so low. Today, the first time it's pulled back in a little bit, and now the VIX is up 8%. So I would say down, but the same thing, 2097 to 2099, that band, which is along the same with the other fellows we're talking about, 2100, kind of the same thing. Bearish under there, but if we do take out that 2100, really strong, really strong. So, and I'll say the level of confidence, I don't know, 70%. So, okay, let's go back. Get back on my screen here. Okay, so now start with Glenn. Hey, Glenn, what developing events will you be watching for the week?
There are a number of things. It's curious because I almost started to call David yesterday and ask him if it was too late to switch me being present on the program until next week, because this week I kind of was over the holiday. I didn't pay attention to what was going on, so I quickly brushed up last night. I agree with, I'm not sure if it was Roy or Corey who said that, there are a lot of fundamental factors that carry a lot of impact. That's true, but from the technical standpoint, I look at it, there's always going to be some event or events that crop up or manifest to kind of bring about what the charts are showing at deeper levels. So this week in particular on Friday, I guess the two big things I'll be thinking about that are, superficial level, I think OPEC meets on Friday, and then the jobs report. Those are the two big things at the end of the week that could, supply some volatility. I think also on Thursday, is it Wednesday or Thursday? I think, or at the middle of the week, I think Janet Yellen speaks. So there's going to, I think whatever Janet Yellen says in her report to Congress, I guess on Thursday, and how that kind of caroms off of the unemployment report at the end of the week could be major factors to look at that could supply the market with some volatility. And is going to be determinant, I guess, in terms of where we end up at the end of the week. I agree with the consensus here. That 2100 area is the critical zone. We break out above that, it's off to the moon. It's off to the races. I was telling traders that I consult last week, we close above the 2094 area. I'll be more embracing of the long side of the market. If we don't close above that, then I'm currently short the market here. So, but again, in terms of bringing these factors together, I think the major events that I'm watching are going to be towards the end of the week, or from the midpoint of the week on. There's also a situation, I guess, where the ECB meets and to discuss a stimulus and further easing. So how that's going to impact are the U.S. markets, we'll see. Again, those are the primary events, event-wise, that I would be watching that occur towards, from mid to the end of the week. The jobs report on Friday, and then of course OPEC's meeting. My personal thought is that the Fed is not, I believe that the Fed is not going to raise interest rates until next year. So, and that I believe that based on the technicals and other time factors, but it looks to me fundamentally that the numbers are supporting that. I just don't see a pattern of numbers that are coming out that would support an increase sooner rather than later. I think the opposite is the case. So I'm not looking for that rate hike to occur until, say, next year in the first quarter. I have very powerful indications looking out a little longer term for the stock market in particular. I have over 90% confidence we're going to see a big turn I'm not sure what it's, if it's going to be a top or a bottom, but the middle of January is where I have the greatest consensus from all of my different methodologies to indicate a major transition in the course and trajectory for stocks in the U.S. Might that correspond with a hike in rates, in the first month of next year? I'm not certain. I just know that that's what the data is showing me. But again, going back to the question, I think this week in particular, things will heat up on the fundamental front in terms of whatever Janet Yellen says. I think it's Wednesday or Thursday, and how that plays off against whatever numbers come out on Friday in the jobs report, and then secondarily the OPEC meeting. I don't think that's as direct, going to be as direct an impact, but I think the next time they meet is in June. My anticipation is that they're more or less going to maintain status quo. I don't believe that the Saudis will agree to cut production at this point. They just have too large a treasury of reserves, even though there's a lot of pressure, I guess, internally for them to do so, is what I'm hearing. But the big factors in terms of our markets here is the jobs report. I guess that's the major event. So my guess, again, is that they're not, ultimately, I don't think it'll be, whatever numbers come out, I don't think it'll be sufficient to warrant a hike in December, or I don't think that will happen.
Okay.
So yeah, but those were the events that I'm looking at fundamentally this week that I'm aware of.
Okay, great. Thanks, Glenn. And the same question, Roy, over to you.
I really think that most of the events are baked in. We've baked in all the chatter about the rate increase. Just about everything else. There's no real events that are, I think, disruptive, aside from geopolitical events, meaning the threat of military engagement in the Mideast, but that would only be good because military spending is always good. So I mean, that's one of the reasons I think we're going to have a balance. The other event I expect to see, and we've already heard a little bit of it, is that we're going to see that online retail had a big jump, even though retail is soft, and I think that's going to affect some of the big players, the Amazons and whatever. But we're going to have a lot of good news on that front.
Okay, and Corey, let's go over to you. Same questions. What events are you looking at for this week?
Sure, I'm with Glenn in terms of the fundamentals. Just the ones I had written down to mention today was, of course, the unemployment report. That'll be the big one. The Beige Book, of course, Yellen's testimony before the Congressional Committee. Also ISM, just the ISM number Tuesday. It's about 50, I think, last time. That's at the midpoint contraction level. That's good. That's positive. I go back and forth in terms of the Fed. I think playing their games of speech. And the data, no, I don't think we'll get a rate hike from the data itself. But and I've been saying that for the year, that they will not raise rates in 2015. But they keep discussing, they keep sort of jawboning and saying, we're going to raise rates. So they may have painted themselves into a corner in doing that, and the market expects that in terms of performance. So it may be illogical, but I would say they probably, by the way they're talking, explaining, and preparing the market, that they will go ahead and initially inch those rates up a little bit, and that may be a bad decision, but I think they've painted themselves into a corner to do just that, unless the data are extraordinarily weak. I say if they're slightly weak, it's a 50-50. If it's mixed data, they'll raise rates. If it's good data, of course they'll raise rates. So that's going to be the variable, not so much this week, but going forward into December. Pay attention to the data, of course. From a technical standpoint, and showing the chart, which is my expertise, and not so much fundamental, but the technicals, this is going to be the pivot point, the decision that I'm looking at with respect to 2100, and this will go over in this chart to the right. So it's the midpoint from 2015, and the market's stalling repeatedly, even though the bullish data from Thanksgiving and into this month has not been that strong to push it higher. I think we get a swing down, and that downswing probably targets 2050 in this level thereabout. So I'm looking for this down move. Another way to justify that or correlate that is this intraday chart of the S&P futures. It's a little bit different numbers, but still negative divergences in momentum. I think more importantly, breadth or internals or stocks making new 52-week highs, left chart here, So all these things are going down as the market tests the underside of a very critical resistance level or target. So I'm expecting, as we're already seeing this right now, a push down, maybe 2060 S&P futures, and probably a pivot up off of that midweek or thereabout. So again, I'm thinking we close the market lower this week, unless the alternate thesis takes place, which is all this stuff is essentially irrelevant, and we push higher. And as the other panelists have said correctly, if we push higher and negate all these divergences, resistance, etc., it's going to take a lot of stop losses and trigger a short squeeze or a feedback loop of buying pressure, and that's probably going to propel us up to at least the prior high, which was 2015, and it's potentially higher than that into the next week. Other factors to watch, I mentioned Amazon. So as we keep on, the S&P is at resistance with divergences, so is a leading stock like Amazon. So it's diverging, and with reversal candles and other, just for quick, I won't go too many, but just Google, same principle, divergent resistance coming down. So that's what I'm looking at. The technical levels, overhead resistance, divergences, and leading stocks are forming their own little divergences. But that's what I'm focusing on this week.
Okay, great, Corey. Thank you. And then for myself, the key that I'm looking at for this week would overall just be the jobs report. For me and for my style of trading, I don't trade so much as kind of picking a direction. I more trade based upon volatility because I'm an options trader. But then I just want to cover my stuff for big moves down or big moves up. So the real vol-inducing move of this week for me is going to be Fed. But I also think that with the VIX being so low, 15 now it's 16, 16.5, I think the overall floor of volatility is going to be higher going into the Fed meeting. So this week there's a vol-inducing move on Friday. We're at a vol-inducing level that all the panelists have said this 2100 or 2097 in the SPX is a major level, and markets don't like to hang around major levels, so I see that as a vol-inducing event, because if we break through, I agree with Corey that we're going to go after those highs at 2134, but if we fail, then the VIX is real cheap, and I do see volatility coming back into the market if we start selling off. So I really look for vol-inducing moves, and that's why Friday, jobs. That's what I'm looking for. All right, let's go back to Glenn. We're going to go into our last question. What method or techniques, Glenn, do you use to overcome the emotional aspects of trading?
There are a number of things that I kind of could mention explicitly. I think they're all collectively wrapped up in one word, and I kind of, and I think most of us would agree, and that's detachment. To the extent, and I tell this to all the people I work with, you are detached from any specific outcomes. It will kind of enable you to interpret the data more objectively. Easy to say, not necessarily easy to do. I don't mean to come off the cuff or cavalier about it, but I think that's the critical concept. To the extent I can separate whatever is going on in terms of my personal thought stream, and that would enable a more pure perception of the data. To that extent, I'm able to react and respond more appropriately to what's going on. So one of the things that I do a little more precisely is whenever I'm in a trade, or even prior to entering a position or establishing a position in a market, I kind of put myself in the thought of mind to indicate that, remember, there's a spectrum of possible outcomes, some of which are profitable, some of which are not. So that kind of maintains more of an equilibrium of balance in terms of my thought. It enables me to, abide by some of the old standbys of getting out or quickly when I'm not seeing an alignment between my position and how the market's moving. So detachment would be the critical thing. Also, I'm constantly just going through my ritual of the steps and the checklist of indications or relationships that I feel are relevant to whatever situation is at hand. Constantly focusing on that kind of keeps my head off the keeps things more objective in my analysis. So I guess that's the critical concept. Detachment would be the key to counteract any baggage from my emotions negatively impacting the analysis. So that would be it.
Good. Thanks, Glenn. That was a good answer. Let's go over to Roy with Steady Trader.
Okay, well, I do a few things. One is that I believe in working one system at a time and getting good at it, so you develop confidence and know the nuances. Not jumping around. I think jumping around to different strategies or different types of indicators based on the news or whatever kind of emotional thing is going on is kind of a trap. So I use my system, I stick by it. If it doesn't work, I go to a different one. But just having confidence in your system. We teach a system that uses the principle of what I call compensating errors. It's from decision theory, and it basically says if you have a decision to make, an important decision, and putting money on the table in the market is an important decision. To take that big decision and put it make into many little decisions. So that's how I approach all my trades with probably there's a dozen little decisions that go into each one, and I make them quick without thinking too much. Bing, bing, up, down, yes, no. Don't give time till the emotions sink in, knowing that I will get, if there's 12 decisions, I'll get, probably get 9 right and 3 wrong. I know I'll get a few wrong, but at the end of the day, I'll make a good decision. And I believe that's a strength of any type of trading decision making in terms of what you're going to buy. Finally, well, there's 2 other things. One, the third thing is using stops to curtail any loss and prevent drawdowns, and just using them pretty tight, around 1%. And that's it. Take your losses, own them quick, and get out. And the final is I'm a very short-term perspective. It's almost day trading now, about an average 2-day hold, but it gives you a perspective of getting in and getting out all the time. And what's important is not so much the getting in, it's the getting out. It's the idea that I'm always getting out. I'm always closing out, always closing, taking my gains, and that is a comforting position to have, because you are not exposing your capital any longer than necessary. As long as it's moving up, it's in there, but just take it out quickly, and get into that habit of taking it out while it's real, and then not leaving it in too long, succumbing to greed, which is of course an emotion that kills a lot of trades, leaving it in too long. So it's those 4 things.
All right, good stuff, Roy. Thank you. And now let's shoot over to Corey at Afraid to Trade.
Oh gosh, I could spend an hour talking about this. Just general, the key thing is to keep it tangible. Markets are intangible, markets are abstract. Do things that are tangible, meaning get up out of if you're feeling stress, get up, do jumping jacks, go for a walk, do something. Journaling helps a lot. Writing in the midst of a trade, write things down, text things, whatever you need to do. Just even keeping a stopwatch is tangible. I'm feeling stressed right now. I'm feeling fear. I'm feeling terror. I'm feeling dread. Take a stopwatch. Do something tangible. Write down when the feeling starts, when it ends, because each time you feel that, you'll have a time marker to say, last time it lasted 3 minutes. Now I'm at minute 2, etc. Again, keeping journals, breathing, but just moving the body. If you're in a trade, do something. It doesn't have to be closing a position. If you're in a losing position, don't necessarily just run to the stop button as we get almost deer in the headlights look, but put a resting order in. Do something. Make an action. Don't just keep it theoretical. Don't hope and pray and think that it's going to work out and do these positive, it's going to work, I'm not, whatever it is, just something real that you can do, because markets, again, are abstract. Breathing, and even just taking action of what you're doing, and inventory is what helps a lot. There's much more to go into, lots of research on psychology, trading psychology, but I think the easiest thing to talk about is just make these things tangible and do something.
Okay, great, Corey, thank you. This is probably my 5th or 6th time on the show, and I have to say this is the first time where we went through, and I agree with everybody. And it's kind of interesting, and it reminds me of, I play golf. And the way I see golf is you go and you learn how to play golf, and you find an instructor that works for you, but everyone's kind of saying the same thing. They're just trying to say it in a way that resonates with you. And so for the three answers and for my answer, I feel they're very, very similar. So I'll give my answer, but if you go back and listen to them all, I kind of feel like they're all the same, and I agree with everyone's point. So the way I see trading psychology is it's just not real. It's just something that people create. I think a lot of times it allows people to make excuses about trading and about positions. So when I trade, and everybody I work with, it's always, if you want to do a trade, write down the trade, write down the reasons for the trade, and then you're done. And then that's what you can control. I think this goes back to Corey was talking about this, talking about worrying about what's tangible. And so I try to put myself in the best percentage trade possible, the same way a casino looks at blackjack, where you can lose in any 1 hour period, but over time things are going to work in my favor because they have for throughout my career. So, but my point with psychology is I get into a trade, I write down the reason for the trade, I write down when my bias would change, and then the market's going to do what the market's going to do. But then every day I still go over my entire portfolio. I constantly am making sure that those reasons of why I got into a trade still exist, and if they no longer exist, I do not allow myself to sell myself on the position. I'm out. Sorry, the phone's ringing. So that's what I really try to define everything. I want everything black and white, no gray. I don't sell myself in the middle of a trade to try to convince myself to stay in there. And I think that everyone's kind of saying the same thing in a little bit different ways. So again, first time, I agree with everyone. Really good answers. Okay, let's just go through and have final thoughts. If anybody wants to share their screen, we have a little bit more time, and we'll go to Glenn.
Okay. Let's see. What do I need? Can you guys see the screen here, or no? I forgot what do I click to show my because I had an array of charts.
On the left, when you move your cursor over to the left side of the screen, there's a menu that pops up, and
all right, let's see. I won't waste too much time. If okay, let's see, chart or chat and screen share, and let's see, where's my? Can you guys see? Do you see the chart there, or?
No, we can't see the chart.
I have a daily bond chart up, but I was trying to make a point, but I won't forget that, or I won't belabor that. Yeah, again, I'm pretty much in accord with with what's been said by all the panelists today, and I thought there were some interesting points. I kind of like the making things tangible, because the market is, to some extent, it's intangible or ethereal. So I'm in pretty much accord with this. I guess to reiterate or reemphasize what I was saying earlier, somebody told me years ago, be wrong quick is the way to, you can make a fortune by getting out and cutting your losses. It's become a cliche. So I'm a big, I like to adhere to that idea as much as possible. And getting out early, you can make a fortune. So so thinking in terms of probabilities, Mark Douglas, we've all probably heard of him, and a lot of the philosophy and ideas that he came about or presented, I think, are very relevant to what we do. So, yeah, I would just re-emphasize that. Picking up on Jonathan's last point, it's before I ever enter a position, you want to figure out where do you see price action that's not, or that's inconsistent with your analysis, so you already in advance know where your getting out area or range is. So you're almost on autopilot, and to that extent, to the extent you can limit the downside, allow your methodology and the ratios and the performance of it'll take care of itself given enough flips of the coin, so to speak. So the critical component is disciplining yourself, being detached to the point where when things don't move in accordance with your analysis, you're quick to exit that. And then, again, the law of large numbers will typically, eventually, whatever edge your methodology has, it will ultimately find it. You just have to hope that you haven't gone bankrupt or liquidated your resources before it does. And if so, then that's a winning formula. So, yeah, I pretty much like and resonate with a lot of the ideas that were mentioned by the other panelists today.
Okay, thanks. Thank you, Glenn. Roy, let's go over to Roy at Steady Trader.
Yeah, that get wrong quick. I like that. That's why we set the tight stop losses. One other thing that I do, and it goes along with this other thing you just mentioned, is that I trade a daily portfolio. I don't put all my eggs in one basket. It's usually between 2 and 4 trades. They're all small bets. Small bets, you don't worry over. I just never I don't succumb into this thing about, betting the farm on one great trade because it looks great, because I know, yeah, right, it's probabilities. So I always go in with 2 to 4 positions in a day. They're all small bets. It's not going to kill me. I put tight stops on them. And the averages, the probabilities of the system are that, more are going to win than are going to lose. A few won't, 1 or 2 won't trigger. The winners will outnumber the losers, and bingo. It's mechanical. I try and make it very mechanical, and just not fall into this whole thing about pride. This idea that I'm going to make a great trade, that I'm going to get the best, I'm going to catch it right at the bottom, or I'm going to get out right at the top. That kind of stuff to me is just feeds the ego and feeds emotion. I just want to get into the middle of a trend, take my gain, and get out. Take my gain while it's a gain, you know what I mean? And then stack up those little gains. And again, so going in with a daily portfolio is just one more way of just hedging risk and not making a big deal over any one decision.
Good answer, Roy. And I think that comes into the point of why it's important for retail traders to work with professionals as well, because that confidence that you're talking about, it's something that's developed over years of being in the business. So let's go over to Corey with Freight the Trade.
Yeah, focus on the bigger picture. I think Glenn mentioned intermarket, and even if you don't trade these things, if you're an intraday futures trader or a leading stock trader, it's helpful to look at what the broader picture of money flow is, especially if all markets are at key levels, because they trade at least a correlational aspect. And these are the 5 that I cover for memberships, and just even in the blog as well. It's the S&P, which again, we're down up. This is an hourly chart. So again, price is down up and stalling at resistance with divergences. Gold down into support to an extent, and crude oil also down, hitting support. Dollar up, making new highs, and Treasury down up. So I think we focused on trends earlier. What's the big picture? Gold, commodities, oil are declining. Dollar, to an extent, stocks are rallying. So we don't really want to put this is a daily chart of all these markets. We don't want to do, again, short-term swing trader, day trader, get the bigger picture and try to make your trades as much as possible in alignment with that bigger picture. Again, stocks are, to an extent, trading higher, stalling. They're relatively flat, but still, gold has a strong downtrend. Oil has a strong downtrend. Dollar has at least one a strong uptrend, and treasuries are sideways. So keep that bigger picture in mind. And on a bigger analysis this is an ETF, I won't go too detailed, but this is the S&P. So we're the best of a bunch of bad options necessarily. The S&P is close to the highs, but Germany, Switzerland, etc., Canada, Singapore, all the other ones are coming off their lows. So in relative strength terms, we're the best of a basket of not so great economic options, but nonetheless, keep those in mind. So again, psychology is important too, but focus on trend and align yourself with the trend, because the probabilities tend to mount up or tend to be in your favor when you trade even lower time frame setups in the direction of the higher frame trend. So that also helps keep emotions down. Otherwise, if you're watching a 5-minute chart all day, you get all twisted and turned around. But try to make your trades in the direction of the bigger picture if there is one, a trend of the bigger picture if there is one. And again, don't bet on reversals in markets. It's tempting to do so, but how low can oil go? Even lower. How low can gold go? Even lower. How high can the dollar go? Even higher. So do not make the mistake of thinking this is a bottom. When these things happen, these big liquidation swings or short squeezes, all those take place. So bigger picture, align yourself with that trend at all points in time.
Great. Thanks, Corey. I'd like to welcome Alla Peters, just joined us from Alpha Wave Trader. Hi, Alla. Can you hear me okay? Alla Peters, can you hear me?
Hey, Alla, it looks like you're muted. There's a menu near the top. When you move your cursor over near the top of the screen, there's a menu that comes up to unmute yourself.
Okay. So I'll just jump in at any time. I'll go through, and again, my name is Jonathan Rose with Active Day Trader. Just to wrap things up, great discussion today. I really enjoyed the discussion on the emotional side of trading, something that we haven't discussed, at least since I've been on the show. So I really enjoyed that. Again, Jonathan Rose, Active Day Trader. We do a little bit more about Active Day Trader. The big thing that we do for our members is we have actionable trade ideas every Sunday evening, and then we talk about all those ideas during the week. So if you want to check us out, it's activedaytrader.com, and those trade ideas give you a pretty good feel about what we're looking for. So, can you hear me now? So on the top, you just have to unmute your microphone, I think. It's
Alla, if you move your cursor to near the center of the top of the screen, a little menu comes up that, where you can unmute yourself. I can't unmute you from here. You have to unmute yourself.
One second, folks. We're just having a little technical difficulties. Yeah, from my side too. I show that you're okay. Your microphone access is the same as everyone else's.
Yeah, there's nothing I can do. You have to just in the menu and unmute yourself.
Guys, I'm wondering if it's the browser, because I remember the very first time I did this, like more than 2 years ago, I guess. I was using Mozilla, and when I switched to Chrome, things went smoothly. I don't know. I'm just guessing. I don't know if Alla is having a similar situation.
I'm on Chrome as well. Alla, are you on Chrome?
That's funny. I can't use Chrome. I have to use Firefox.
Yeah, when I tried Firefox, it wouldn't work. I would think Firefox should work, but for me, I always have. I've tried it. Sometimes it does, but when I use Chrome, I always no problems.
Yeah.
But whatever will enable it, I guess.
I just changed something here. Is that doing anything? That didn't Yeah, there's nothing I can do to unmute her.
Okay.
All right. Well, I guess we'll just have to work on this and have her back soon.
Great. So, David, yeah, we went through everyone. We went through all the questions. I just want to thank you very much for inviting me to host again. I really enjoyed it, and we'll throw it back to you.
All right. Yeah. Thanks. Thanks, everyone. Good show. So, yeah, just a reminder to everyone: if you haven't had a chance to take a look at this report yet, just go to TimingResearch.com/reports. You can download this or any past report there. Also go to next weekend, go to TimingResearch.com/current survey to check out the next survey there. And want to thank everyone again. Glenn Thompson of PacificTradingAcademy.com, Roy Swanson of SteadyTrader.com, Corey Rosenblum of AfraidToTrade.com, and Alla Peters of Alpha Wave Trader. We'll try to have her back soon when we figure out the technical issues. And of course, Jonathan Rose of ActiveDayTrader.com. Thank you for hosting you.
Cool. Thanks, guys. Great show.
Thank you, guys.
Thanks.
Bye-bye.
Okay, bye-bye.